Welcome back to another video, everyone. In this video, we are going to dive into the anatomy of candlesticks, right? So we are going to cover what is a candlestick. We're going to break down a few candlesticks and identify how they're formed, what they mean, and how they can benefit us when we are trading. We are going to go on different time periods for each candlestick so we can better understand what time period to use and what each time period means when we are trading using candlesticks. We are also going to cover the 4 elements of candlesticks, and we will go over certain plays showcasing candlesticks that are in progress. So first and foremost, what is a candlestick? So a candlestick, which is right here as you guys can see, a candlestick basically shows a stock's price movement, such as the opening price, the closing price, the high point, and the low point, very clearly on the chart based on a certain time period. We'll get to this in a bit, but for now, the only thing I want you to understand is that a candlestick, which is showcased right here, showcases us the opening price, the closing price, the high point, and the low point for a stock based on the time period. So for example, let's say this is company ABC. If we are looking at a candlestick for company ABC, this candle or this candle or this candle, whatever candle we look at, will showcase us the following 4 information for that stock depending on the time period. So I'll explain what I mean. What I mean by that is this right here. So this is what a candlestick looks like, right? These are 2 candlesticks. Now, if you look at both of these candlesticks, what do you guys notice? You should notice that this is green and this is obviously red. Now, why is this green? Why is this one red? Let's understand that and let's break that down. So first and foremost, let's break down the candlestick body and the formation, and then I'm going to explain why it's green and why it's red. This right here is known as the body. This right here is known as the body of the candlestick. The body of the candlestick. This right here is known as the wick. This right here is also known as the wick or the shadow. The wick or the shadow. Let's understand that once again. This is the body of the candlestick, right? This is the wick or the shadow, the wick or the shadow, the wick or the shadow, the wick or the shadow. Right now, let's say, for example, this is a daily candlestick. What that means is that this candlestick right here and this candlestick right here represent information for the full 1 day for stock ABC. Okay? So what that means is on let's say whatever date is, the stock opened at 10. That's the opening price, meaning the first transaction of the day was at 10. The last transaction, known as the closing price, let's say was at 12 for stock ABC. That's why this is green, because the stock opened at 10, closed at 12. That's why the body is green. Now the wicks represent the highest point. So this means that the stock went to maybe 13. This means that the stock maybe went to 9. But the body here is green because the stock opened lower and closed higher. Now let's say stock ABC the next day on a daily time frame is red. Now the reason it's red is because the opening price is here. Let's say it opened at 14. It closed below 14. It closed at, let's say, 9. This is the same. It's the highest point, 15. And this is the lowest point, let's say 8. That's why this is red. Because the opening price was higher than the closing price. This is green because the opening price was lower than the closing price. Once again, the upper wicks represent the highest point for that time period, the highest point for that time period. The lowest point for that time period, the lowest point for that time period. So let's go over some more examples. Let's break this candle down. Now you guys can see it's a red candle. Now if it's a red candle, what does it mean? Let's break each and every single component down. So this right here is the highest point for the candle. This once again is known as the wick. The highest point is right there. Next, we have the opening price at $10. Beyond that, we have a closing price at $9. And then we have the lowest point at 890, right? If this is a daily candle, this is what it represents for the day. If this is a 5-minute candle, this is what it represents for 5 minutes, right? Once again, let's break this down. The stock opened up here. This is the highest it went for the day. This is the lowest it went for the day. And this is the closing price during that time period, which is why the candle looks like this. Now, if the candle opened here and closed higher, it would have been green. The reason it's red, once again, is because it opened here and it closed here. That's why the body is red. The wicks represent the highest point the candle went to and the lowest point the candle went to. Let's look at one more example. Let's look right here. This is green. That means the stock opened here, maybe went this low, and this is where it went to, the high point. Now, if you notice something about this candle, there's no wick. Why do you think there's no wick? There's no wick because the closing price is also the high point for this stock. You can see the highest point for the candle is 15.5. The closing price for this candle is also 15.5. The opening price is 12.44. And the lowest point for the candle is 11.07, which is why the candle is shaped like this. Once again, the candle probably opened and did something like that, or it maybe did something like this. A lot of different formations, but this is the closing price and the highest, the opening price and the lowest price. That's why this candle looks like that. Right now, let's understand certain periods. So let's say this is a daily candle. If this is a daily candle, this is what happened for the day. If this is a 5-minute candle, this is what happened within a 5-minute time period. Now, what do I mean by that? So there's a few different periods in candlesticks, just like I showcased with charts. 1 minute, 5 minute, 1 hour, daily, right? So let's say I look at a 1-minute candle. If I look at a 1-minute candle, it's showcasing me the open, the close, the low, and the high for 1 minute. A 5-minute is going to do the same thing. Open, close, low, and high for 5 minutes. A 1 hour is going to show me the open, close, low, high for 1 hour. And then a daily will show me the open, close, low, and high for 1 day. Obviously, I can select whatever time period I want on a candlestick period, on a candlestick chart. And that will show me information for that exact period. Right? So for example, let's dive into this more so you get a better idea of it. So let's break down a 1-minute candle versus a 5-minute candle, right? So we're going to break down a 1-minute candle right here. Now, obviously, we need 5 1-minute candles to form into 1 5-minute candle. Everyone understands that? Once again, think about that. 5 1-minute candles will be formulated into 1 5-minute candle, right? So let me explain that in this drawing. So this is the first 1-minute candle. So in this 1 minute, this is what happened. Stock opened here, went this low, that's the low point, went that high, and closed right there. That's why this 1-minute candle looks like this. This is showcasing us information for 1 minute. Next, we have another candle. It opened here, closed there. You can see no wicks, right? There's no wicks because the opening price is the low point. The closing price is also the high point, which is why there's no wicks. Next, you can see 1-minute candle. This is showcasing us information for the 3rd minute. 4th minute, you can see 4th minute what happens. Stock opens here, goes this low, goes that high, closes right there. That's why it looks like that. And then we have a red candle. Opens here, maybe goes that high, goes this low, closes right there. That's why it looks like that. That's why it's red. Because the opening price was here, the closing price was lower. Now, these 5 1-minute candles formulated into a 1 5-minute candle. Now, I want you to understand, and I want you to think how this candle would look, right? So the way the candle would look is this is the opening price during that time, a 5-minute time period. This is the closing point, right? This is where it closed, the last closing period. This is where it opened. So the candle is obviously going to be what color? Once again, let me rephrase that. What color do you think this 5-minute candle is going to be? Red or green? It's going to be green because this was the opening price. This was the closing price, right? This is the high point for the candle. And this is the low point for the candle. So the candle would look something like that. And it would be green because it opened here and it closed there. Strong move, right? Now you can see, boom. Just how I drew it, looks the same exact. That's a little bit cleaner, but you can see, you get the idea. That is how the 5-minute candle is formed. Now, if we have a 15-minute candle, right, it's gonna form 3 5-minute candles into that 15-minute candle, right? And obviously, in each 5-minute candle, we'll have 1-minute candle. So it's understanding whenever you get a candle, there's a lot of price formations in that. We will break that down moving forward, but I want you to just understand that when you select the time period, in that time period, it's obviously a formation of other price movements that are constructed candle by candle. Now, if you can see once again, you can see the formation of the 5 1-minute candles are being formed into 1 5-minute candle, right? Now, right here too, let's look at this example. We're looking at stock Roku. 5-minute candle. Stock Roku, same period, 30-minute candle. These are a bunch of 5-minute candles, and all these 5-minute candles are formulated into here, right? So 6 5-minute candles here, 1, 2, 3, 4, 5, 6. All these 6 are going into this candle. The next 6 are going into that candle. The next 6 are going into that candle, right? So understanding different time frames and different time periods are extremely important, and you'll see why once it starts clicking more and more. But you need to understand that when you go to different time frames, like a 5-minute or a 30-minute, obviously a 5-minute is going to give you more detailed information than a 30-minute. A 5-minute will give you a lot more activity than a 30-minute. So that's something you as a trader need to understand and be able to adjust to, and know when to go to a smaller time period and when to go to a larger time period. These are things that you yourself have to be able to adjust to. But understanding this concept is very, very important. Now, how do candlesticks help us? Now, candlesticks help us by showcasing who is in control. Bears, meaning sellers, or bulls, meaning buyers. Or is there even control? Right? Candlesticks basically show us in-depth price action movement. So once again, candlesticks, which are right here once again, showcases who is in control. Who is controlling price? Is it the bulls, the buyers, or the bears, meaning the sellers, or does anyone even have control? Right? So for example, there's a candlestick war. There's the bulls. This showcases bulls are completely in control. Bulls want to drive price up. And then we have bears. Bears want to drive price down, right? So candlesticks help us identify who is in control of price right now. If bulls are in control of price, it's easier for the stock to go up. If bears are in control of price, it's easier for the stock to go down. So understanding who has control is very, very important. And candlesticks helps us identify that. And candlesticks are one piece of that. But they help us identify who has control and who's winning. And sometimes no one may have control, right? Sometimes no one may have control, and you'll see what I mean by that once we get to it. But there are times bulls don't have control or bears don't have control. Now, there's 4 elements of a candlestick, right? The first element, the size of the body, right? These 4 elements are very important, by the way. Right? The first element is the size of the body. That's the first element that you need to understand. That's very, very important on reading candlesticks and understanding them on a deeper level. Next, the length of the wicks. Once again, just to recap, these are wicks. This right here is a wick, right? This right here is a wick. That's all wicks. So the length of the wicks is also extremely, extremely important. Next, the ratio between the wicks and the body is also very, 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 very important, right? And then finally, we have the position of the body, right? Once again, this is the body. What's the position of it? So these four elements of are very important for a candlestick. These are four elements that we have to be able to understand and implement when we are looking at a candlestick. So let's go over the first element, size of the body. So size of the body. The body shows how far price has traveled over the duration of the candle. So in this candle, you guys can see long green body. This is showcasing buyers are in control. This is showcasing buyers are in control. Opening price, closing price. Buyers are in complete control. This is showcasing, right here, we have a small green body showcasing slowing momentum. It's showcasing that that strong move up is slowing down, right? Buyers may have control, but it's not showing us a strong move. This is not really a strong move. And you'll see more how this clicks as we go deeper and deeper into price action. Next, we have a long red body. This is showcasing sellers are in control. You can see opening price, closing price. Sellers are in control. You can see here too. Red body, small red body, which is showcasing momentum is slowing. Now some people might say, well, these are both red. So don't they both mean sellers are in control? And these are both green. So doesn't that mean buyers are in control? Yes, but buyers were able to drive up the price very high here. But here they were barely able to move it up. Same thing here. They were barely able to move it down. And they had a huge move down. So the body of the candle, the size of it is extremely important. This is a strong move up. This is a strong move up. This is a strong move down. This is showcasing, oh yeah, buyers have a little bit of control, but it's not really strong. It's not showcasing their strength. It's maybe holding. It's maybe a resting period. Maybe the stock is taking a break, but it does not represent that buyers are completely in control and driving the price up like they did in A. Same thing here. Like they did in A, sellers are not completely driving the price down. So keep that in mind. So the body of the candle is very, very, very important. The next element is the length of the wicks. Wicks can show the volatility of price movements and price rejections. So wicks are going to show us where the stock is getting rejected, if there's volatility, if bulls and bears are fighting, and what's going on. So for example, when you look at this example right here, what do you see? So larger wicks show price has moved a lot during the candle. And there's indecision between buyers and sellers, right? So if we understand this candle, what do we know? We know buyers stepped in here, right? And sellers rejected it. So this candle represents bulls and bears are indecisive. No one is in control. Even though there's a small green body, the large wicks represent bulls and bears are indecisive. A lot of people get that confused. A lot of people think, okay, there's a green body, that means buyers are in control. No, buyers are not in control here. Because look, sellers rejected, right? And then if you look at this candle, buyers stepped in. Yes, buyers have a little bit more control, but this is not a strong green candle. It's not a strong move up. I would not be comfortable in taking on a buying position here. This is not showing me if anyone is in control. This is showcasing me that no one is in control. Bulls and bears are indecisive. There's no strong control here. If you look at this example, large wick on the upper side showcases rejection by bears. Bears meaning sellers. So you can see stock tries to go up and sellers rejected and bring the price down. So if you look at the strength between bulls and bears, you can see bears rejected it and bulls stepped in. If you're still a little confused, just stay the course, watch the video till the end. I promise it's gonna start clicking a little bit more. All right. Now, if we go right here, large wicks on the downside showcases rejection by bulls. Bears tried to drive the price down, bulls stepped in, and bulls drove it back up. That's showcasing strength by bulls, showcasing bulls are strong, bulls are stepping in. Not giving me a confirmation to buy yet, don't get that confused, but it's showcasing me that there's buyers here. They brought the price back up. And then if you look right here, this big body, remember like we went over in the last example, the size of the body is very important. Big body showcases sellers are in control. Big red body and small wicks, right? This showcases sellers are in complete control. Here, sellers tried to take control and then buyers brought it back up. So there's a difference. Understanding that is extremely, extremely, extremely important. Now, next, ratio between wicks and body. The ratio between wicks and the candle bodies can showcase us what's happening between bulls and bears. So for example, in here, the ratio between the bodies, you can see small body, huge wicks. Small body and large wicks showcases indecision, showcases bulls and bears are not in control. No one is in control, right? So the ratio between the wicks and bodies is very, very important to understand. Right here, you can see small wicks, huge body. What color is the body? Green. Huge green body with small wicks showcases buyers are in control. So that's the next concept. Understanding ratio between wicks and bodies is very, very important. And the last concept is the position of the body. The position of the candle's body is very important to focus on. It showcases strength. So for example, if you look at this candle, the body's at the bottom with the long wick at the top, right? This is showcasing rejection by sellers. Stock goes up, sellers rejected, and boom, stock goes down, right? You go to the next one. This is a little bit different. The position of the body's at the top. The wicks are at the bottom. This is showcasing rejection by buyers. Bears try to drive it down, and then buyers pick it back up. So the position of the body is also very, very, very important. These are 4 elements that you have to completely understand about candles to understand what's going on, right? Now, one thing I want you to completely understand about candles is do not solely trade just candles. Do not try to read candlesticks. Do not just try to trade off candlestick patterns and any of that. Do not solely just trade candles. There's more that we have to factor in, such as direction of the stock in the market, support and resistance levels, volume, and catalyst. Once again, there's more things that we have to factor in. Now, these things we are going over one by one, but I want you to keep this in the back of your head that there's more things that we have to factor in. We have to factor in the big picture to get the best and high probability trades out there. So once again, do not solely trade just candles. Just because a stock is getting rejected or it's showing us a candle like this, that does not mean that sellers are in control. No. There's more things we need to look at, but for now, I just want you to understand everything that we've covered. Next, now let's go over some examples. Now you can see here, this is a resistance level. This is something we're gonna cover in a bit, but for now, let's just look at it. This is a level that we've established on our own. Now every time the stock gets at this level, look what happens. Bears keep rejecting price. Just look at the wicks. Price goes up, gets rejected, gets rejected, gets rejected. Who's sitting here? We know that there's aggressive sellers sitting here. Look, same thing happens. We move forward, gets rejected. Move forward, gets rejected. Move forward, get rejected. Candlesticks are showcasing the rejection. The level is something that we've established, and reading candlesticks, which is one part, as I mentioned before, is one aspect of the whole picture. But you can see rejection, 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 and rejection. We go to another example. You can see stock falls. Where does it fall? To our critical support area, our demand area. You can see buyers step in, 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 buyers step in. Buyers keep stepping in. They keep rejecting. They keep rejecting, so we know that we have buyers here. So the stock comes around here again, which is known as support. If we see buyers stepping in and being more aggressive, we would look to become buyers ourselves. Same thing here. You can see stock goes up, gets rejected. Goes up, gets rejected. Goes up, gets rejected. And then finally what happens? Strong move up. Look at the candle. That's a strong green candle. Everyone sees that? Strong green candle. That is showcasing a strong move up. Now buyers have taken control where sellers usually step in. Same thing here. You can see rejected, 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 rejected. Even though the body gets a little bit above, it keeps getting rejected, showcasing sellers are in control. Sellers are in control. And then you can see here, strong move up, buyers are in control. That's what we're looking at. These are the main things we're focusing on when we are looking at candlesticks. Now if you go right here, same thing. You can see strong move down, buyer step in. Strong move down, buyer step in. Strong move down, buyer step in. And boom. Were buyers able to step in here? Nope. And plus, that was a very strong move down. Look at the body of the candles. Huge red bodies, small wicks, and the body is showcasing that there is a strong move down, right? Same thing here. Stock goes down, buyer step in. See that wick? Buyer step in. Comes down again, buyer step in, rejected. Over and over again. Until we get a strong move down, something like this, right? Until like, let's say there's a red formation of a candle below this, we're not looking to sell or we're not looking to possibly short. We want to see a strong move down. This is not a strong move down. This is a strong move down. These are weak moves. You can see it goes down, buyer step in, goes down, buyer step in. So understanding that is very important. Now, just to recap, candlesticks are extremely, extremely important on knowing how to read them and properly analyzing them. But they're not the only thing we're going to look at. There are other factors. We are going to go over other factors and apply that and apply everything one by one. But for now, I just want you to understand everything related to this lesson.